Market Outlook Calendar Week 09. Calendar Week 08 unfolded at the intersection of monetary policy, trade policy, and geopolitical uncertainty. The released Federal Reserve minutes confirmed a continued data-dependent and restrictive stance. While the disinflation process was described as progressing, several members emphasized the need to closely monitor financial conditions and avoid premature easing. The key factor was not the current policy rate itself, but the uncertainty surrounding the duration and depth of the restrictive phase. Real yields remained elevated, and implied rate volatility increased moderately. For risk assets, this translated into an environment without a clear liquidity impulse. At the same time, U.S. tariff policy introduced renewed uncertainty. Following the legal reassessment of parts of the tariff framework before the Supreme Court, alternative policy measures were discussed. The uncertainty extends beyond trade flows to import prices, corporate margins, and investment planning. Tariffs directly affect inflation expectations, increase input costs, and can generate second-round effects in the services sector. For capital markets, the transmission chain is mechanical. Trade risk influences inflation expectations, inflation shapes rate assumptions, rates determine liquidity, and liquidity affects valuation levels. In digital assets, this configuration manifested as a defensive market structure. Bitcoin maintained its role as core beta. Dominance remained elevated, while altcoins reacted selectively to project-specific developments. The Crypto Fear and Greed Index stayed in extreme fear territory, with single-digit readings. This combination signals liquidity preference, limited market breadth, and heightened event sensitivity. Price moves were concentrated around data windows and often lacked sustained follow-through volume. Geopolitical risk also moved back into focus. The situation surrounding Iran and the Strait of Hormuz remains systemically relevant. Roughly 1/5 of global oil shipments pass through this route. Military exercises, intensified rhetoric, or expanded sanctions can introduce risk premia into energy markets. Rising oil prices directly affect inflation expectations and indirectly impact real yields. For digital assets, this transmission mechanism is critical. Higher energy prices can prolong restrictive monetary expectations, reducing liquidity sensitivity in risk assets and increasing volatility. Calendar Week 09 therefore begins under cumulative uncertainty. Several macro data releases are scheduled, including sentiment indicators, inflation figures, and production data. The sequence of releases will be decisive. If stronger activity data coincide with persistent inflation components, real yields could rise further. If weaker growth data align with moderating inflation, short-term relief in the rate channel may occur. Digital assets primarily respond through the U.S. dollar channel. A stronger dollar typically tightens global liquidity conditions. Structurally, Bitcoin remains the primary indicator. Persistently high dominance reflects defensive capital allocation. A decline in dominance alongside stable macro conditions would indicate improving market breadth. The Fear and Greed Index serves as a short-term sentiment gauge. Extreme readings may enable technical countermoves, but do not substitute for structural liquidity improvement. Geopolitical risk remains asymmetric. A tangible escalation involving Iran would have immediate effects on energy prices, transportation costs, and global risk premia. Market reactions in such scenarios tend to be abrupt and non-linear. For digital assets, this implies elevated event-driven volatility, particularly in less liquid segments. In summary, Week 08 confirmed a macro-dominated and defensively positioned market environment. Week 09 introduces new data, but no structural easing of underlying conditions. Direction continues to emerge through interest rate dynamics, energy pricing, and liquidity mechanisms. The combination of monetary uncertainty, trade policy adjustments, and geopolitical risk sustains elevated volatility and favors selective data-driven movements. This publication is provided for informational and research purposes only. It does not constitute investment advice or a recommendation to buy or sell digital assets. All decisions are made independently and at one's own risk. Quantum data analytics. Analytical. Strategic. Innovative.